Hello everyone, Larry Lavrentis for Ichimoku.co with a daily analysis for the S&P 500 for the trading day ending Monday, December 9th, 2013. Well, the change of trend to trading periods ago, and the market retraced back towards the Kijun-sen and found support there during the latter part of last week. And as expected, we were looking for a change of trend to the upside with the buyers coming back into this market, this very strong market. For the previous day's trading to today, we saw a very bullish breakout up above the Tenkan-sen once again and above the important round number 1800 level of resistance. Unfortunately for the buyers, they found resistance roughly around the major high around this 1813 level. The market was unable to test to that high, and we had a very small white body candle today with some price rejection from that region, and a candle today where the buyers have actually lost control of the market. So, as expected, we've seen some resistance around this major high, and that's not unusual in a market that is looking a little bit overextended, but a market that is trading to all-time highs and major highs. So what we're looking for here is for the market to continue trading up and to trade through the 1813 level. Now, there is some doubt about that. With the body of the candle reducing dramatically, it does suggest that the momentum that the buyers had built to trade through the 1800 level has evaporated. The saving factor for that, however, is that the body of the current candle is actually white. So the buyers have still continued to make net bullish progress. The fact is, however, that bullish progress has decreased dramatically, and it does raise doubt about whether the momentum will be continued. We also had a loss of control by the buyers for today's trading, but by the same token, the sellers have failed to take control. So once again, as with a lot of markets for today's trading around the world in various different asset classes, we've seen the buyers continuing either control or continuing upside momentum, but we've seen a lack of strength from the sellers, and it does raise doubt in all of these markets whether the sellers will be strong enough to change a trend. So what we need to do here is just react as traders, and we're looking to the low here for a potential lower high and lower low. Now, if that lower high and lower low does occur, we potentially have strong support at the 1800 round number level of previous resistance, and on this occasion, which may now act as support as it did here in a minor way. So there is potential for support there. Also potential for support down to the Tenkan-sen, the green line here, which is trading at 1796. And then once again, if the market does trade down through there, potential for support at the Kijun-sen. If the market does come off, we may be creating something of a double top pattern. Technically something of a head and shoulders pattern, because we haven't quite attained that peak, so something of a head and shoulders if the market does come off and break out through the neckline, but also that there is potential for that to be a double top, and looking for a close down below this area around the Kijun-sen. Now, previous resistance close by to that area at 1775, and I suggest that to have confidence in any pattern that may develop through there, we'd want to see a bearish close down below 1775, but we can't preempt the market. At the moment, this trend is still up. There is still a very real possibility that we could take out the 1813 level, and I suggest that that is quite likely based on the fact that the market is trading above the cloud, above the Kijun-sen and the Tenkan-sen. So this market is bullish in all three time frames. And the distance away from the Kijun-sen and the Tenkan-sen, and the distance of the Chikou span above the corresponding price action, is not too great. So this congestive activity that we've seen between 1775 and around the 1800 level and just above has actually been good for this market, taking a bit of a rest here, and is suggesting that the market may, if we do find some momentum here, we may be able to trade to even greater highs than we have in the recent past. Now, in terms of the Fibonacci projection here, we're looking at the market trading through the 61.8% level, through the 78.6% level, but some rejection from above there. So a possibility of a change of trend in line with the loss of momentum by the buyers, but potential for the market to trade to the 100% level, which is 1815, so just above that major high. So we should watch the market around there if the trend does continue to the upside. Above there, we have the 161.8% level at 1837 in blue sky territory. In terms of the Fibonacci retracement, approaching the 100% level at 1813, and obviously that is an important level, as we've already discussed. But really, moving forward, we have a market that's bullish in all three timeframes. We have some loss of momentum by the buyers. It does raise doubt about whether we will be able to take out the 1813 level. If the market does come off, 1800 round number may provide support, or anywhere down below there, down to the Kijun-sen, we could see support coming into the market. Potential for something of a pattern to develop, so we're on the lookout for that. But really, the story here is not about any strength from the sellers. It's about some lack of strength in the buyers in this current candle. And if we see continued strength from the buyers, as we did for the trade prior to today, then we could see the market trade quite higher. But we're looking for a potential lower high and lower low for a change of trend, potentially with the loss of momentum, and support down at one of these levels.